Imagine billions of dollars changing hands in a single deal. Now multiply that millions of times, and you are looking at global mergers and acquisitions hitting nearly $4.5 trillion in 2025. That's one of the biggest deal-making years in history. But what does this massive surge mean for companies, for investors, and for everyday people like you? Stay tuned, because the impact is bigger than you think. In 2025, global deal-making soared to approximately $4.5 trillion. That's a staggering 50% increase compared to the previous year, and the second largest total we've seen in more than 4 decades. What's driving this explosion? A wave of mega deals, transactions worth $10 billion or more. We're talking about 68 of these massive deals, each one big enough to reshape an entire industry. It wasn't just a busy year. It was a year of giants making monumental moves, signaling a major shift in the corporate landscape. The sheer scale is hard to comprehend, but it tells a story of ambition, strategy, and a whole lot of money changing hands at the highest levels of global business. So what fueled this incredible deal frenzy? It was a perfect storm of 3 key drivers. First, financing became much easier, and credit got cheaper. In 2025, companies found they could borrow money at lower rates, which gave them the firepower to go after huge acquisition targets. Think of it like a massive sale on loans for the world's biggest corporations. Second, we saw more relaxed regulations in major markets. Governments and regulatory bodies, in some cases, took a step back, allowing large corporations to pursue bigger and bolder tie-ups without as much red tape. This opened the door for deals that might have been blocked in previous years. And finally, it was all about strategic transformation. Companies weren't just buying rivals to get bigger, they were desperately seeking scale and digital dominance. In a rapidly changing world, firms realized they needed to either own the future or risk being left behind. This pushed them to make aggressive moves to acquire technology, talent, and market share. Beyond the big numbers, it was the specific megadeals that truly defined the year. The battle for Warner Brothers was one of the most talked about events, a true clash of media titans. Netflix and Paramount went head-to-head in a bidding war for the legendary studio, with the deal value soaring above $80 to $100 billion. This wasn't just a purchase. It was a fight for the future of entertainment and streaming. In another sector, the railroad industry was shaken by a proposed merger between Union Pacific and Norfolk Southern. This wasn't just about combining 2 companies. It was a monumental effort to create a coast-to-coast freight giant, a single network that could span the entire United States. A deal of that magnitude would fundamentally change the logistics and supply chains of North America. These weren't just business transactions. They were seismic events shaping the future of their industries. Of course, all this activity isn't just big numbers on a screen. It's a powerful signal to the markets and to every single investor. For one, investment banks had a phenomenal year, earning record-breaking fees for advising on these complex transactions. They were the architects and facilitators of this boom. The sectors leading the charge were tech, media, transportation, and healthcare, which together topped the list for deal value. If you wanted to know where the money was flowing, you just had to look at those industries. Even private equity firms and sovereign wealth funds got in on the action, though it was really the mega corporations that led the way, using their massive balance sheets to make transformative acquisitions. For investors, this reshuffled the deck, creating new market leaders and forcing everyone to reevaluate which companies were poised for future growth. So why should you, sitting at home, care about any of this? Because these multi-trillion-dollar deals have a real-world impact that reaches everyone. For consumers, big mergers can change everything. They can affect the products you see on the shelf, the prices you pay for them, and ultimately who controls the market. Fewer competitors can sometimes mean less choice and higher costs. For investors, this trend is a direct influencer on stock prices and sector consolidation. It determines which companies become dominant industry leaders and which ones get left behind. A single big deal can send ripples across your entire portfolio. And for the broader economy, a surge in M&A activity like this often signals confidence. It shows that companies are optimistic about the future and are willing to make aggressive bets on growth. Experts watching this trend believe the momentum could continue well into 2026. Some are even predicting an even bigger year ahead, based on the sheer volume of late-stage deals in the pipeline and the continuous, relentless investment in technology. The strategic need for companies to adapt and grow isn't going away. Investment banks are forecasting that as long as financing remains accessible and strategic pressures continue to build, boardrooms will keep looking for their next big move. We could be at the beginning of a multi-year supercycle of corporate consolidation. But despite all the excitement, it's not all smooth sailing. There are significant risks and concerns to watch out for. Industries that are heavily regulated, like telecom or utilities, may see governments push back hard on antitrust grounds. Regulators are still worried about monopolies and reduced competition. Many investors are also growing concerned about overvaluation. In a frenzy like this, are companies paying too much for their acquisitions, setting themselves up for failure down the line? And while mega deals dominate the headlines, smaller deals have actually become more scarce. This suggests that while the giants are getting bigger, it might be getting tougher for small and mid-sized companies to grow through acquisition. This M&A boom is a truly global phenomenon, with different regions contributing in their own unique ways. Boardrooms in the US have been leading the charge in terms of total deal value, executing some of the largest transactions of the year. Meanwhile, European and Asian markets are playing crucial roles in industry consolidation, especially in sectors like manufacturing and finance. And when it comes to technology, investment is flowing from all corners of the globe as companies everywhere race to acquire the next big innovation. It's a global chess game where corporations are the players, and entire industries are the prize. Global deal-making at $4.5 trillion is a huge story, but it's so much more than just a number. It reveals powerful trends in growth, competition, and the future of global business. It shows us where the smart money is going and what the world's biggest companies believe is coming next. If you want weekly updates on investment trends and market news just like this, make sure you hit that subscribe button, give this video a like, and comment M&A below to let me know which deal we should break down next. Thanks for watching.